Hello everyone. Um, a video on market analysis of the NFP. It's Friday, 9 p.m. I'm going to go over what happened and what I'm expecting for next week. Okay? I'm not a financial advisor. You can see my disclaimer at the bottom. I'm going to start with the charts. I'm sorry, with the economic calendar. I want to go very quickly and then we'll go to the charts, but I want to show you the data that came out, and beware, we had been coming from Wednesday with this ADP non-farm employment. So that started giving us an idea. Then it was Thursday, this US unemployment claims. And then it was this unemployment range, the change that was pretty high. That means there is a higher employment. Okay, so part of this is also interpreting and understanding the effect of these economic events. So if you are just starting to trade, and I know you've heard and read that the news is a big thing and don't trade during the news and whatever, but you'll see how, how it's a two-side coin. And if you understand, and throughout, through time, you'll get the hang and the idea of what should happen and what could happen, and eventually you do manage to predict and anticipate the market. But for now, understand that whatever positive news comes out for the US economy will bring metal prices down. And I talk about this. If you're new to my channel, how you doing? Subscribe, whatever. If you're new, I only trade gold, so that's what I talk about. And I look at the metals in Forex Factory. I have the Forex here, of course, but it's, you know, it's the same thing. The only difference is the numbers here come out green, the numbers over there come out red. But anyway, I don't want to dive into more of that. What I'm saying is, um, the number came positive for the US dollar, for the US economy. The economy is still rising according to these, you know, sources and whatever. And so that should generally mean that gold should come down, right? Well, let's go into the chart and see what happened and try to understand. Okay, well, this is my projection, but I'm just gonna show you what happened before we go into that. So I'm gonna leave that right there for you guys, and then in a few minutes, um, I'll explain. This is also part of the projection I have for next week, but this could this can yeah, we can just take this out. Let's go delete all this. Okay, and let's go to the 5-minute time frame. We want to see the news, which was this. However, I want to make this a little bit bigger because let's go to 15-minute. You see, the chart was it was this. Okay, this was the important thing happening. I made a few videos back here saying how this was a big support, and that the market would need liquidity up over here for it to break it, how it did just here. So go back. I'll make sure to put all the links to those videos somewhere at the end of this one, and you can also go on my Instagram. But point is, price broke the support, but it showed a pretty strong rejection. Instead of closing even lower and continue to fall, like continue dropping, right? That's what you'd expect. But this happened on Thursday. And the NFP comes on Friday. Came on Friday, came today. So I think that's also part of the reason why um the market didn't make a solid decision on coming back down. Again, I will always say this during my videos. The format in which I make these are in a think out loud, and I'm talking with you about the market. I'm not trying to show you what's happening, what can happen. I'm not um explaining because I know everything and I'm behind everything and I have certainty of things. And so I'm certainly not telling you that what I think could happen is what's going to happen. Okay? So I'm interpreting things. The thing is, I have a lot of years doing it, so I humbly say, and pretty, you know, I'm pretty good at it. Now, price goes up, back up, and about over here starts coming out volatility pre NFP. That candle right there was minutes before 8:15. The next candle is the news, and you'll see it was a big candle to the downside right there. Yeah, we're focusing on the right side of the screen right here. So how could we have traded this? Because we could have, and it's all on this candle right here and on this one. These two candles are key. Remember, there is a strategy, or not a strategy, there is a footprint, a clue in the charts, and that's the A's and V's. So very fast and spike movements like this one, up and down very quickly, those are A's. And same goes with downward and then back up, these are the V's. If you notice, there's a V right here, there's a big V right here. You see, I know you'll say, oh, but there's V's and A's everywhere. Okay, yes, but this is a very choppy market. But within 1 minute time frame, you can find them, right? Just at key areas. The idea is to find them and spot them on key areas. Of course, there's an A. Of course, there's a B right here. But where is this? This is right in the middle. I don't care about this. I care about areas over here on the top and on the bottom. And this was, notice we're in the 15-minute time frame. So if we I mean, I don't want to go in yet, but that's a clue right there. Okay, we could have done it, but I want to continue. And I notice something. Price falls, it makes the lowest low it has made since March, and it made exactly on 1810.50. If I stand on this candle, and you see at the 1810.40 to be exact. I know that because I'm looking up here toward the middle up here, low, highs, and I stand on this candle and I can see the low wick. And ever since that, price has been rising pretty high. So that's interesting, right? Like at the beginning we were saying that gold price should be coming down because this was a positive news for the US, but at the same time, besides the employment change for non-farm jobs was positive, the unemployment rate was negative by a little bit. But I'm not trying to say either that that's what made the market come back up or whatever. Like, there has to be something going on, and we are trying to interpret. Now, the explanation I can think of right now, and that makes sense to me, is that there was a big buying order here at 1810 or 1811, and that's what made the pretty pretty violent rejection on that price. I mean, keep in mind, um, that gold hasn't traded near the 1700s, near 1800 since like just months. If we go to the weekly chart, um, we're talking March, yeah. So it's been a while, and therefore people say, "Wow, this could be an interesting opportunity." Now, if you ask me, I think this was a sort of an anticipation. I think you'll see what I think, but let's go back to studying the effect of that news. And so what happened is, boom, strong rejection to this area that I had highlighted there. It makes a rejection back to the middle. Now, there's something that I want you to start practicing, and that is dividing your ranges into halves. Okay? And what range am I going to talk about is the one that the market had been since it stopped falling last Monday. So the whole week, the market was ranging from that wick to that wick, and I'm talking about the one in the middle, not the price of during the NFP, but this one, and this is the high, okay? And if we divide that into the middle to half, so I'm taking my retracement tool and I'm gonna put a line on the 50% of that range. You can now think of that as a pivot point, okay? As a pivot price, and that means that if price holds as it holds that price, it holds that barrier as a resistance, it should trade downward. And if it holds it as a support, it's going to trade upward. Now, yes, it's not a perfect price, right? So we can adjust it to a sort of a range in an area of where the market tends to slow down, and it's a decisive, I don't know if I'm saying that right, a decisive area. And so on its way back up, that's where it sort of stops and kind of wants to come back down. But the push was so high that pullback it was making, it just gave a second opportunity for the market to come back right up. And the fact that we saw this this candle right here with that long wick into this imbalanced price area and closing above the closing of this candle, that was also a clear footprint and clue that the market was bouncing off and to the upside instead of wanting to come down. Okay, so that's how you should start interpreting these things. This is imbalance from this wick to this wick. Google it. I'm not going to explain to you and teach you now, but it's because self-explanatory. It's a gap in which prices have not been negotiated, so the market tends to look for those and reject off of it or cross them. That's it. So this candle comes into that range and it rejects really quickly. And so that's a pretty clear footprint. Now, some of you maybe say, okay, I want to see this in 5 minutes. I want to see what's happening. Well, this is also powerful. Poop, 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 poop. That's me saying poop down, poop right back up. How it comes down, it comes up. And what is that? It's a V. That's a V. And if I go in my 1 minute, how is that going to look like? I'll show you how it's going to look like. There it is. There it is. You see that? That's an interesting V. See, now that V makes sense. Right here. Boom, boom. Okay. And you can measure this from here to here. Now the V's, they close like right on price. It's literally a perfect V or a perfect A. It's not something like this, and it's not something like this. Oops, sorry, I forgot I had to double click. You get what I'm saying? It's not like, it doesn't stay short from where it kind of marks its way, and you'll see it clearly because it's after like a little time of consolidation, and then hard push back up to the point where it started. Obviously it's not like exactly decimals, but look at this, and even here. So the minute you also saw these two, 1 and 1, that's like a pretty perfect order block kind of action type. Like market comes in, gets orders, come back out. Yeah. And so the moment you saw that, you could also start anticipating and say, okay, it's rejecting pretty hard there. What are the chances of it breaking back down? I might as well risk it, so I'll buy. That's my interpretation. A lot of people would think, oh, it's gonna come down, that's a pullback, I'm gonna sell because it's gonna. Yeah, you see, that's where we think differently. That's where people sell and others buy. But I'm trying to explain why it was not the correct idea to sell, because after the NFP you saw very hard rejection, and that pullback, another hard rejection up. That's it's 2 to 1. Like the market it wants to go up. Okay, now let's keep going. Market is breaking, stops a little bit, passes through that middle area of the range, and look at this candle. Boom. The fact that this candle closed so strong to the upside after and across breaking the middle of the range is also a key and a footprint and an idea or a possible clue that it might just want to retest, not only retest this resistance, but to go and look at all the spaces it has for it to test the resistance of the range. You're gonna say, oh yeah, but look, it didn't get there and it went back. Well, yeah, it went back, and what did it give you? A second chance. And where did it give you that second chance? Right in the middle of the range. That's a perfect opportunity. I remember I sold here and I bought here. So I can show you, and I don't have to, but I'm not that, I'm not about showing the money I make. I'm proving I know what I'm doing. That's all I need for myself and for people to have confidence in what I say, and feel free to discuss the market with me, because that's all there is to it. So again, in here, 1 minute, the A is right here, boom, from here to here, boom, boom. Second opportunity. It tends to give a second opportunity, not always, but it does. What happens here? Another type of behavior of rejection. This didn't happen so quickly, but my criteria was more of this area. It was the fact that, hey, it's retraced into the middle, but the middle has always acted like a resistance or a support whenever it's broken, so I might as well take my shot. And where do I put my stop loss? Right here. What do I have to lose? Like, think about it. If this was like a market, if this was like a store, and they, come on in everybody, how you doing? Welcome. I give you the opportunity to buy the market here. It could go all the way back up to this resistance. Come on in. What are you gonna do? How much money you got? And then you're like asking yourself, like, well, what if it doesn't go down? I mean, go up. What happens? What happens then? Then the guy will tell you, don't worry, young boy. If the market does not go up, as soon as it crosses down over here, I make sure I close your position. So you say to yourself, wow, that's like I'm risking just this area, this margin, but you're saying the market could go all the way up here. Wow, that's a pretty good ratio. Well, let's go. Let's take it. Risk it for the biscuit. So, it makes sense to buy that little pullback, that push down. Okay. Now, watch what happened. It reached the resistance. It almost made a turnaround. So, I personally closed my position here. And yeah, that's it. My Friday was over. I didn't have to do anything else. I bought over here, closed like here. I remember I bought here, and that one I did close like up here, sold again here, bought again here. And this is possible, people. This can happen. Okay. So yeah, that's what I wanted to sort of go through, and now I want to see what could happen because the market stayed like I thought it was gonna continue breaking, but it slowed down. It was like recovering, and it's now ranging there. But notice where it stopped. It stopped right at that range, at the resistance. All it did was kind of like fake breakout of it, but then it came back. Look at these wicks, 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 and then just when this candle closes a little bit outside that range, it closed back inside. You see? So, oh, I did not want to do that. Um, there you go. You see that? So now we have to ask ourselves, wow, well, what's it gonna do? Because it faked out here, faked out over there, and also if you've seen, I was recording something. I think it was over here, somewhere at this point, and I was about to finish the video, and I said expect news to happen something like a fake out of whatever these areas. So say it was gonna go up and it would come back in, or say it was gonna come out and it would come back in to the bottom and come back into the top. I I think I also I said don't get too excited if wherever price is going break in those areas. That's the ultimate way it's gonna go. Like I try to give you a heads up on the fact that the market always tends to do that especially during NFP. Like it'll make a very 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 quick movement and induce people to sell or buy, and then the market would just turn around. And they did that right here, over here, then back over here, over here, and after breaking support and closing below, it went back inside to the resistance of the weekly range. That was pretty interesting to me. Um, if you analyze the chart on daily, you'll see that it's a pretty big decision, quote decision, right? Because not everything is certain, but the price right now is respecting these prices right here and making this possible triple top here. I'm not trying to say it's going to probably come down, but now we can jump into the second part of this video. And if you're liking it, please make sure you give that a thumbs up or whatever you want to do. But this is the second part of the video in which I am now trying to anticipate the coming up week. And how long have we been recording here? 24. You know what? I'm going to leave this here so that this could be a short video for you guys. And I'll record this analysis as a part 2 of the video.